Okay, so before we are ready to start, so once again, you're welcome, and I hope you're having a very good morning and everybody is ready to learn a few things. If you need, get a pen and a notebook, and be ready at least to jot down a few reminders for yourself. So you're all welcome to our webinar today. And our topic today really is we're unpacking dividends. We want to understand how, when you're making your investments, the final earnings from your profitable company finally make way to your pocket. And that is really what we're unpacking today. But before we start that, I will request a colleague of mine who will be our pastor for today, John, to give us an opening prayer so that we can quickly get our engagement of today underway. John, please.
Thank you, Bob. Let's pray. Dear Lord God, we want to thank you for the gift of life and past each one of us. We don't take it for granted. We want to thank you for us to have the opportunity to meet this morning to share knowledge in terms of how we can better ourselves financially, our families, and the generations to come before us. We dedicate this meeting into your precious hands. May you come and guide us as we discuss and as we learn together. And even after this, as we go to execute, so that we come back with good bumper harvest at the end of it all. We pray all this in the name of the Almighty God. Over to you, Bob. Thank you.
Amen. Thank you, John, for that. So today our participants, I have a powerful panel composed of two impressive ladies, and I will request them to put on their cameras so that you can tag and introduce them. So first up is Michelle. Michelle is an analyst from our trading desk, and really she will be breaking down for us where dividends come from, what are they, and really from a market's perspective. So please join me in welcoming Michelle, and Michelle, you can say hi to our audience.
Hello, everybody. Welcome to this webinar. I look forward to engaging with you and giving you good insights with regards to dividends today.
Thank you, Michelle. Alongside Michelle is Remy. Remy is a member and the registrar with SCD registrars. Really, she brings high expertise from the registrar payment processing side of dividends and any maintenance, or how do the operational side of managing dividends across the whole life cycle. I don't know, Remy, if you're able to share your camera so that our audience can be able to see you. Remy, I believe your camera is closed.
I've opened it. So good morning, everybody. Good morning, team. Thank you so much for joining us.
Okay, Remy, it is still closed. Do you need to open it up?
Oh my God.
Okay. So as Remy is getting the visuals on, really we will have a brief opening presentation from Michelle. She'll just set for us the platform for our discussion. Then subsequently we'll have a quick interaction with the team to at least unpack Michelle's presentation, and then we'll open it up for a Q&A. So I think without wasting time, I'll request Michelle to take over and take us through the presentation she has prepared. So Michelle, over to you.
Okay. Okay, maybe just allow me to share my screen.
Please proceed.
Can you see my screen?
Yes, it
Can I
is
get
clear.
a thumbs up? Okay. So today we're going to, like Bob just mentioned, we're going to talk about how company profits come into your pockets eventually as shareholders. And in simple terms, you're going to just answer the question, how does a company profit end up as your money in your account? By the end of this session, you should be able to understand how this journey works, and all the way from the boardroom into your bank account or your mobile money as a shareholder. So just to begin with, we're going to talk about what dividends are, where they come from, why they aren't guaranteed, which is a common misconception, and the numbers worth knowing as an investor when it comes to dividends, as well as when they're paid and how they're paid. So what are dividends? A dividend is a portion of a company's profit paid out to the people who own shares in it, like the shareholders, which are people who hold stocks in that company. Think of it as a thank you check from the business. And so basically, when a business earns revenue through sales, or the money it makes through, if it's a service that's provided, after the expenses are paid off and the taxes are paid, there'll be money that's left over, usually, and that's what we consider a net profit. And from that net profit, the board of that company can decide to either reinvest the money or pay it out to its shareholders, which is the stockholders, or both, and keep some, retain some, and pay out some. So usually what the board does, it weighs the needs of the company to know whether a certain amount should be paid back or should be reinvested, depending whether there are expansion plans or maybe just to continue business a certain way to retain that company money. And are they guaranteed? So no, dividends aren't guaranteed. Just because a company has made a big profit doesn't mean it owes you dividends. It's a decision, not a right, and it's entirely at the discretion of the board of directors. Even profitable companies can choose not to pay a dividend at all. It's normal and it's illegal and legal. And the only time a dividend is enforceable is if it has already been declared formally and approved. So if a company has already declared that it's going to pay a dividend, it's obliged to pay you that dividend. But before that, it's not. And why make the board decide not to pay you, pay out a dividend that particular time? Sometimes it's because of the reinvestment needs of that company. So you'll find a company wants to open a new branch somewhere and it will need that money. So it may not give it out in dividends if they're going to need it for expansion and for growth, or maybe to buy new equipment that is required for that business. Another reason why it may not pay out a dividend is if, let's say, the cash flow position of that company, for example, the profit that's reflected in a company is the money it has earned but not necessarily the cash it has received from those sales. So sometimes maybe it has people who have paid on credit, and yes, they have earned that money in profit, but they don't have enough cash, exactly liquid cash, to give out to its shareholders in terms of dividends. So many times the company will have to first be sure of its liquidity before it gives out that money in dividends. But also the future outlook. So sometimes the board can look at the future and say, maybe it's uncertain and we may need this money, maybe in the next particular year, given the different hardships that may come along, given different forecasts that this company has had. And it's for that reason that it may decide not to pay out that money, because if they do, obviously they won't have access to it because it has been given out, and yet they may need it given those forecasts. And now when it comes to how companies choose to pay their dividends, different companies have different approaches when it comes to dividends. So there are a couple of policies that they may follow. You find there's a stable policy that a company follows, and it tries as much as possible to pay a consistent and predictable amount every year. And that's their policy. They say in this company, our target is to pay out a certain dividend at all times, or at every year at a particular time. And then others, they have what they call a residual policy. So it puts into consideration the growth first. So whatever is left over from what it has budgeted for growth and investment is what they will use to give out. Not necessarily, they won't necessarily target to give out a particular amount every year. So whatever is left over is what they will give out. And then there's also the companies that have progressive policies. So these aim to steadily grow the dividend. So maybe if they started at a particular dividend, let's say, for example, 2 shillings per share, their goal is to see to it that maybe every year or every few years, that dividend increases, and they work towards that. So those are the different policies that companies can use to approach dividend payments. Now, as an investor, you need to know the numbers behind dividends and what they actually mean. So these are terms you're going to be hearing often being thrown around with regards to dividends. And it's important that you pay attention and know what they mean, because it's important for you to understand them. For example, earnings per share. So this is basically how much the company has made for every single share. So given every company has a certain number of shares that are in the public, that's for public companies. And how to get the earnings per share, you get the net profit of that company that year, and you divide by the number of shares. So you get to know how much profit the company has made for every single share in issue. And why is this important? Many times it's used as a measure of performance for the company, especially listed companies that have their shares in the public, issued to the public. Then we also have what we call dividend yield. So this is how you know how much you've made in terms of returns as an investor. This is because it's one of the forms of returns of an investor, not just capital gains. It's a dividend yield. So you get the dividend they've given out that year divided by share times 100. So if you bought that share at 100 Ugandan shillings and they've given out a dividend of 18 that year, the dividend yield for that particular return, you're going to be getting 18%. So the cash return you earn from that particular dividend alone, shown relative to the amount you paid for that share, is basically what that is. And then a payout ratio is basically the share of profit paid out versus what is kept into the business. So usually this is used to understand, let's say, the policy of the company, with regards to how it looks at payouts and dividends. So there are companies that give out a certain percentage of dividends, percentage of their profits as dividends. And then there are others where, like we have talked about, it depends on the policy. So how much the company has retained relative to how much it has given out to the public is what they call a payout ratio. Sorry. So the next thing that will be important to know are when these dividends are paid. So from the board proposal to the date that they decide who qualifies for the dividend and who doesn't qualify for the dividend. So a dividend follows the clear governance path. And what usually happens is when the results have been released with regards to performance of the company, the profit that has been made, directors are going to recommend an amount based on that year's performance. So they'll say, this is how we did this year. I think the board will propose how much should be given out to the shareholders as dividend. And after that proposal, every listed company has what they call an annual general meeting. I hope you guys are going for an annual general meeting. So they've talked about it quite a bit. It's very important so that you can monitor your investments. And it's in that annual general meeting is when they bring it to the public to vote whether it's a reasonable dividend to be given out that year. So they bring it to table it at the annual general meeting for a vote, and your shareholders are able to approve that dividend. And it's from that approval that a dividend is declared. And once it has been approved, it becomes formal and legally binding. So it now is obliged to pay you that dividend. I remember we just previously talked about whether it's guaranteed or not. So at this particular point, it is confirmed and guaranteed that you should get this payment. And if you don't, we're going to discuss how you can go about that. And the dates are set, the book closure, which we're going to discuss in just a bit, as well as the payment dates are announced after this particular time. Now, when it comes to the book closure, the date that decides who qualifies for the dividend and who doesn't qualify for the dividend. So book closure is basically the date on which the company freezes its share register, and it's like a snapshot of who owns shares at that particular point in time. So only investors who appear on that register at that time will be receiving that particular dividend that they have announced, regardless of how long you've owned the shares. Even though you bought those shares last week and your name appears on the register that day, you are entitled to that dividend. And why that matters is because if you buy shares after that dividend, has after the book closure date, the share goes to the person who you bought it from. It doesn't come to you as a buyer. And so we're going to get into the details of that. And so it's also about timing. And there are two particular dates that you should be watching out for when you're buying your dividends in this particular case with regards to dividends. We have the come dividend date and the ex-dividend date. So around the book closure date, the company will decide when these dates are. And if you buy that particular stock, come dividend, it means that you're buying that stock inclusive of the dividend. So you're buying it at a date in which you'll be included among the people who will be entitled to that dividend. So you qualify for the dividend in that case. And if you if you buy that share ex-dividend, so after the debt has been, that usually are included. So if you buy ex-dividend, that means the person from whom you bought the share will receive that dividend. It's not, you are not entitled to it. So the time in which you buy that stock around this period matters on whether you'll get that dividend or not. With regards to taxes, dividend income is usually taxed at the source. So amount is credited to you, and by the time the money enters your account, the tax has already been taken off. So it's from that point that you need to know how much you have actually made, aside from what has been announced. Maybe on this, Remy would want to come in and tell us more about that.
All right. Thank you so much, Michelle. My name is Remy Rehema Kenya from the USE, and I'm so happy to be on this call with you all, guests. Thank you so much for taking the time to join us as we take you through all things regards dividend. So I'll pick it up from where Michelle has stopped. And I think she was talking about how dividends are taxed. In our laws, the laws of Uganda concerning income tax, the rate for residents or local investors is 10%. So every income in regards to dividends, it is going to be taxed at source. So whatever you receive in your bank account, that will be net of the gross dividend that you received. Then for the foreign clients or investors, they're taxed 15%, and this same rate also applies to institutional clients. Those are the companies, so on and so forth. Yes. Michelle, you can continue the slide. So how are they paid? These dividends are paid through banks and mobile money. Before then, we had checks, but then that was phased out. So we only paid through banks and mobile money wallets. So for those who have bank details, whenever a dividend is declared, always ensure that your bank details are updated on the company register so that your dividends can be routed to the right bank account. Same for the mobile money wallets. Always ensure that the number to which you want to be paid to is active. And it's important to know that it has to be registered in your names, because companies don't pay to third parties. Yeah, they pay to the actual shareholders. The name that we have on the file is the name that should match your mobile money number. That's why you find that in case the name differs from what is on the file and what is in the bank as well, the funds will have to bounce back. So you end up not receiving your money on time until you have that corrected. Yeah, like I've said, why accuracy matters. It's for your good, you know. When these dividends are declared, most investors who are keen, you already have something you're going to use that money for, either invest it or you're going to use it for something else. So if your details are not updated, you'll find that you're not going to get your money on time. And then also the process of claiming your bounce payments takes some time. You find that some companies will say we shall be just paying at the end of every month or after 2 weeks, after consolidating the different queries from other clients in regards to that aspect. So it's very important to have your bank details updated, your mobile money numbers up to date so that you don't miss out at the time when the dividends is paid out. So, and in the event that you want to change any of those payment modes, always contact your broker, fill in an updated form, or contact the registrar for that particular company so that your details are updated on the file. Because sometimes I could be paid via mobile money at the beginning of the year, then the dividend that is going to be paid in September, I want it to go to bank. So always keep us informed as the registrars and the brokers so that your payment is smooth. Then in the event you haven't received a dividend that you owed, okay? Yes, you have a right to claim it. You write to the registrar of the company and claim your dividend. So when you write to us, the registrars, we shall first of all confirm whether you're entitled. Because remember, Michelle talked about the book closure date. Any shareholder that is not on the book closure date, that is not on the file as at that date, will not be entitled to the dividend. And this is where investors go wrong. Some investors would want to get the dividend from their shares in that company. But again, they sell before the book closure date, you get it. So once you've sold, that means you're off the file and you'll not be able to receive a dividend. So it's important for you to mark those dates and have them at the back of your mind. Okay, if I want to liquidate my shares in this company, I'll have to wait for this date to pass, then I can sell. That way, even if the dividend is going to be paid a month after, you'll be entitled as much as you're not on the file at that time. Yes, so it's important for you to note that. We shall have to confirm, of course. When we confirm that you're on the register, then you'll have to update your details with us, the payment details. Then after, we shall be able to process your dividend. Oh, this is the last one. So in a nutshell, dividends are discretionary shares of company profits. This has been talked about by Michelle comprehensively. So when a company makes profits in a given financial year, and it's their policy to give dividends, they'll give a portion of it to the shareholders as a return on their investments. And this is recommended by the board of directors, and then the shareholders approve at the annual general meetings. These dividends are paid through banks and mobile money. Thank you.
Okay, so thank you, Remy and Michelle, for taking us through that. And to our audience, thank you very much. And I hope you've been noting down. And I'm happy to say that I think people are really following the proceedings. And there are quite a number of questions here. So the first one, and which will go to Michelle, is I think it's a question from a gentleman called Athian. So Athian Michelle is asking, does the shareholder get his or her share of retained dividend when he or she decides to leave the company?
So to answer that question, Remy has just talked about it. It depends on if you are on the register as at that time. So the dates are announced, the dates for the book closure. And if you are on the register as a shareholder as at that time when that has been announced, as well as the date that has been put, you are entitled to the share. However, if you sell that share before the particular date, then you are not entitled to the share. So you only get the share if you're on the register as a shareholder as at the time that has been stipulated.
Okay, so thank you, Michelle. Though I think what maybe I think Athian had brought in is the concept of retained dividend. So I think a dividend can only be retained when it's not able to be sent to you. I think that needs to be clear. It's only when it is not paid to you and you had qualified for one reason or another, and one of the reasons could be either you don't have a dividend payment option on your account, or it is paid and it bounces for one reason or the other. Now that one you can always claim at any point in time. And maybe at this point I'll bring in Remy. So Remy, I've not received my dividend for one reason or the other. How do I claim it?
Thank you, Bob, for that question. In the event you've not received your dividend, firstly, you'll have, of course, to inform the registrars to the company. Different companies have different registrars, and I want to believe if you're a shareholder in a given company, you always follow the notes that companies issue out. They normally put their registrars at the end of any announcement, whether they are financials, AGM notices. So they always put their registrars at the bottom of the notice for you to contact them. So in the event you haven't received yours, always contact your registrar. Then the registrar will have to follow up with you. Yes, well, that's what I can say on that.
Okay, so thank you, Remy. So I think just to re-emphasize this, if you missed out on your dividend, so the first point of contact is always at the registrar, whose details are always shared on the company notifications. I also actually saw one come in that how do I know that dividends have been paid or are going to be paid? So the first one is always a notice that the company makes public. I believe for most of you who are investors on the exchange, you also always receive emails telling you that please be notified, company A will be paying its dividends on this date. This is the cutoff date, and it will be paid on or before such and such a day. So when you receive that information, then you know, as long as you still have shares, then you are on that register and you'll be entitled. Then Michelle Joseph here is asking that what happens if the board recommends a certain dividend payout and the shareholders reject the recommendation?
So usually that's a discussion that's held at the AGM, and they'll propose it. And if you're at the AGM and there's and the shareholders reject the dividend, that is usually discussed then, and a resolution can be passed with regards to that. But that's usually a discussion held at the AGM. And that notice is taken back for discussion, and it's from that they can come up with a resolution.
Okay, yes. Thank you, Michelle, for that. So, Joseph, when it comes to decision making within a company, the ultimate organ or place where decisions are ultimately made is the AGM, and it's by the shareholders. So if the shareholders reject what has been proposed by the board and management under there, then that is, if they are saying pay us more, then definitely a decision or conversation will be had. If they are saying we don't want us to be paid a dividend, we want you to do this, then whatever the AGM wants and the shareholders by default is what will be done, because ultimately the company belongs to the shareholder. Yes, Michelle, this is yours. So they're saying for companies which give low dividends or even none at all, So somebody is saying, is it worth it for me to invest in such a company?
To invest in that company or not, it comes down to what your goals are as an investor. So ways of getting returns specifically, so they are capital gains and dividends.
So Michelle, kindly speak up, please.
Can you hear me now?
Okay, much better, yes.
So as a holder in a particular company, there are different returns you get. You get capital gains tax if you sell that share at a higher price than you bought it. But also, as you hold that share, if you receive a dividend within that period, it's also a form of return. So depending on what your goals are as an investor, we will determine if it's worth it to invest in that company or not. Because if a company is giving low dividends or none at all, it's possible you could be gaining from the fact that the price of this company goes up and you can sell it at a high, or in different aspects. So as an investor, whether it's worth it to invest in a company or not, it depends on your goals and what you want from that particular investment. Is it dividends? Is it to sell it at a higher price?
Okay, so thank you, Michelle, for that. So to I think the gentleman who had asked the question. So investing in companies carries two straightforward benefits. The first one could be for cash flows, and that could be dividends. The other one could be to grow the investment you've put in. So you might find, and I believe in Michelle's presentation you saw, where she was telling you the basis for why companies might not pay dividend. It could be about growing a company, and you see your company is growing, you bought it at 100 shillings, now it's at 500 shillings, but it's not paying you a dividend. So really depends on the motivation, but also the other could be about future prospects. The company might tell you that we're not going to pay a dividend for the first 6 or 7 years. So would it be right to stop investing in it? So now those are the considerations you go through before you choose whether to invest or divest. But it depends on your drive and other circumstances of what the company, or the reason or rationale as to why the company might not be paying a dividend at that point in time. Then Remy, there's a gentleman here called Marvin, Kamara Marvin. He's asking that what is the least amount in terms of number of shares a company or an investor needs to have to earn a dividend? Is there actually a minimum?
Thank you, Bob. Well, there is no minimum. Even if you have one share and a dividend is declared, remember they usually say they give a rate per share. So 5 shilling per share. Even if you have one share, you have 2 shares, 100. Any number of shares are entitled to a dividend whenever it's declared. So there is no minimum. But of course, for you to realize that gain, you should be having some substantial shares. I think that's what I can speak to that.
Okay, yeah. So Marvin, there is no minimum number of shares to qualify for a dividend. What qualifies you for a dividend is owning one or more shares within that entity. But I think Remy went ahead and clarified for you and told you that for you to get something reasonable, you need to be having in a number of shares. So it's a numbers game. Just trying to look some of the other questions. Okay, now there is a question here that how do I know that this is the right time to buy shares? or is it okay to buy them at any time in a year? I think just as I think I saw this, Justine, sorry. Michelle, are you able to give guidance for Justine or to Justine? When should she buy shares?
Justine, you're able to buy shares at any time. Yeah. So you can buy shares at any one time in the year. However, whether you benefit from a dividend that has been declared or not will depend on the date. So you either buy it before the stipulated date. There'll be a stipulated date on which they'll say at this particular point in time, this is when we are freezing the register, and the particular people are in this register at this moment will be the ones to receive a dividend. So maybe that's a consideration you can make to ensure that you own the share as at that time. However, buying a share, you can buy it at any time in the year if that's what you want. There's no stipulated time.
Okay, so thank you, Michelle. So true, Justine, but I think for purposes of our conversation today, if your interest in buying a share is to earn a dividend, then you must buy before the cutoff date. And I think Michelle and Remy really went into the details of that. If they indicate that you must be on the file by, let's say, 30th of July, then you must make sure you have bought before 30th of July to qualify for that dividend. But otherwise, generally, you can always buy anytime and you would qualify for a dividend as and when they declare a dividend payment and the closing date. I think I see here a question, a comment from Robert Wanji. Robert is asking, and I think we had already answered this, how can a person get at claim dividends and what is the process? Now, I think, Remy, there's a second one from Robert, and he's asking, okay, I think we can support him. So, Robert, currently, for the capital markets industry, the dividends stay with the company. So if, let's say, you do not receive your shares, assuming you either don't have payment details, then your company that you invested in will keep those until when you come and claim for them. So currently, that is the state of affairs. I know you're asking that when are they transferred to the state treasury or Ministry of Finance, as is in Uganda. Currently, not yet, I think, but there should be a law along those lines that we would be able to advise as and when such a law is made and it comes into effect. But otherwise, currently, the dividends are with your company and you can claim by writing to the company either directly or through the registrar or through your broker to support in following up with your claim. Okay. I see that maybe, Remy, if you can spare advice, how would somebody change their payment dividend option? I was in the bank, now I'm not happy, or no longer my bank account gets closed. How do I change, maybe to go to mobile money or get a new bank account added onto my account?
Okay, thank you, Bob. Now, in the event you want to change your payment detail, like I said earlier, you have to contact the registrars to that particular company. Maybe I'll take us through the different registrars that are serving on behalf of the issuers. So you write to them or call, then they will share with you what we call a dividend mandate form. Now that form is just specifically to fill in those details that you want to be amended on the file so that your dividend can be routed to that particular payment mode, either mobile money or bank. Okay, so the point of contact is the registrar. These registrars work on behalf of the companies, and maybe I can just share them with you. I can talk through them based on the different listed companies that we have on the market. SCD registrars, where yours truly speaking works, handles MTN Uganda, handles NIC Holdings, handles Uganda Clays, handles Bank of Baroda, and it also handles Quality Chemicals Industries Limited. That is, all those companies are under the docket of SCD registrars. Then Stanbic Bank, Umeme, DFCU, Airtel Uganda, they are under C&R Group. Then NVL, that is New Vision, and British American Tobacco are handled by image registrars. So I'm only giving you companies that are locally listed, which most of us here have shares in. So you contact those registrars and they'll guide you on how to update your details. Like I shared, we shall share the dividend mandate form, which you'll fill and attach your ID. Then the details will be corrected on the register for that particular company in which you own shares. Thank you.
Okay. Thank you, Remy. I believe Richard, Silas, your question about how to approach for your UCL dividends has been answered. But I will ask John maybe to share the details of SCD registrars, the email, so that Richard can see how to follow up with his dividends. Now, Michelle, there is a question here from Rosalind Nicole. I think she says she was happy to know that it's the shareholders who make decisions on dividends. And she's asking that, could you shed more light on how shareholders can change an increase or a decrease to the dividend?
So, Roslyn, that's a discussion that is had at the AGM. And usually at the AGM, if you attend, they will talk about it and they'll bring it up in discussion and ask for a vote. So they'll also ask for any objections. And it's at that point where you can raise your hand or ask for audience. I'm sure they'll be happy to give that to you, and you'll be able to express your opinions and your views on that particular matter. And that discussion is usually had at the AGM. I hope that answers your question. So you as an individual won't change and say, just because me in particular, I wanted to be higher or lower, but you can suggest it, and usually that's a discussion that is had at the AGM. So it's very important as a shareholder to attend your AGM meetings, because that's when you can voice your views on different matters as a shareholder.
Thank you, Michelle. Yeah, I think also, Rosalind, key to note is it's a democracy. So you as Rosalind alone might want maybe to reduce the dividend, just as an example. But if the other shareholders are not in agreement, then most likely, and it stays, your opinion might not be carried for that day. So really, that is how decisions are made at an AGM, and that's why they vote. And you see that, okay, this resolution has been passed by majority, or maybe this resolution has been rejected by a majority. So that's important for you to note. I see Dixon. Dixon is is asking, and I think Remy, this is to you, that as a Kenyan, am I taxed as a local or as a foreigner?
Okay, thank you, Bob. As a Kenyan, you are a foreigner, you're not Ugandan, so you're taxed as a foreigner in a nutshell. So you attract a 15% withholding tax on your dividends.
So thank you, Remy. I think we have some extra questions in the code. Okay, now there is a question here from Judith. Judith is saying they are investing on behalf of the circle, and she says we know circles are withholding tax exempt. That can the USE allow us claim for the withholding tax or be refunded to us? If so, how can we go about it? So Judith, thank you for this question. So there are two routes you can take. So the first one is that you can go through your broker or custodian if you're using one and get that proof, or if you have a withholding tax certificate that exempts you, share with them, then they will share with the registrar and the company, and going forward, they would not apply the tax to you based on the fact that you're withholding tax exempt. But in the event that the withholding tax has been deducted, then you can approach your registrar, submit your TIN number, and then they give you that withholding tax remittance document, which then you can go to URA and file and apply to get a tax credit, which you can use to offset your other tax liabilities. So, of course, the most important one, or the best, I would say the best solution is ensuring you provide those details to your broker or custodian and they are submitted to the registrar so that you're not deducted that withholding tax in the first place. But if it has happened, then the URA has a mechanism in which then they can do a rebate for you, and you can use it to offset any other future tax liabilities. So I see a gentleman called Seka asking us a question which we might not be able to answer here in this forum. Okay, I see Anita, you have raised a comment. I believe John has taken note of that and we shall get back to you. Innocent Kilewo had asked for a list of registrars. I believe that has already been answered by Remy. Somebody asked how many companies are listed on the Uganda Securities Exchange. I say, Susan, you've been responded to 11 locally listed companies and 8 from Nairobi. Okay, somebody has asked about corporate bonds. I believe John and somebody wants to understand corporate bonds. My colleague John has taken note of that. And hopefully he will arrange for us a conversation around corporate bonds. And Stephen is asking that for him, he wants to know, how do you account for shares? And he's asking, and I believe, Michelle, this will come to you, is if I have 100 shares, how much money do I get?
If you have 100 shares, you get the dividend per share times 100. So if it's 6 shillings per share, you get 6 shillings times 100. So you get 600 shillings.
Okay, so thank you, Michelle. And maybe more to that, Stephen, is you will pay a tax, or what we call the withholding tax, based on the type of investor you are. So from Michelle's example, if it is 6 shillings per share, you have 100 shares, so you'll get 6 multiplied by 100, that is 600 shillings gross. If you're Ugandan, then you would be deducted 10% of that as withholding tax. So that is 60 shillings. So 600 minus 60 shillings of tax, you will get 540 shillings on your account. I think a gentleman called, I think he's called Unknown, is asking that, can I get notifications when I'm paid? Yes, I believe it is common and general practice of most of the registrars. When they have remitted this, then they send you an email, and certain companies also even send an SMS telling you that be notified, your dividend has been paid. They even some go ahead and send you what we call a dividend warrant. And I think to Stephen's case, that will break down how much you earned, how much tax you paid, and how much came to you. And it will also specify who, or rather where that money was paid. Was it paid to your phone? Was it paid to your bank account? I think that is important. So as we try to wind up, I think we'll pick about another 2 or 3 questions. I see people who are asking who is the registrar for DFCU. I believe Remy confirmed the registrar for DFCU is C&R. I see Samali also asked, is it possible to inform the investor? And Samali, I think we have finished confirming that. Patrick is asking, who do I contact for my Stanbic dividends? I believe that was also answered. It is C&R registrars. Now, Michelle, I think this will be the last one for you. Someone is saying there, how many types of dividends are there? So it says, I hear interim dividend, I hear final dividend. What is the difference?
So there are different types of dividends that a company gives out. Interim dividends are within the year. So not every company will give out interim dividends, but those that do. Within the financial year, there's an interim dividend that's given within the year that is not considered the final dividend. So there's also what we call a final dividend. Usually that's the last dividend for that particular year if they're going to give out. And there are also other kinds of dividends like special dividends. And yes, I think more of that information will be put out in an infographic. It's in the plans of the USC Academy to put out infographics of that information. So
thank you, Michelle. So maybe just a brief and an add on what Michelle has shared. So any dividend that is paid before end of a financial year is called an interim dividend. So it means maybe after 3 months, after 4 months, 6 months, the company says you can pay an interim dividend. That means it is before end of the period. And that is their financial period, which in most cases is 12 months. Now, any dividend that is paid after the end of the financial period is called a final dividend. So really, those are the most common. I believe Michelle talked about the others, but in terms of normal business, you will interface with an interim, which is before the end of the financial year, and then a final dividend, which is paid after the end of the financial year. I think the last one we are going to deal with is, I think, for a gentleman who is in Saudi Arabia. I believe he's called Enrique Kitui. Yes, Enrique is wondering whether they can use a foreign bank account without using one for a relative. in Uganda. And he's saying he wants to avoid the headache that comes with that. Enrique, that is true, and we will pay you a dividend provided you share your rightful foreign bank account details, either at the point of opening your account or even later you can amend and change as Remy guided us. So please feel free to do that and your dividends will come to you. Of course, the only challenge you need to plan for is that if that account, let's say, I don't know, is it Saudi Arabia, is it Rios or something, the currency? So there will be, you'll face what we call a foreign exchange conversion risk. So depending on the conversion rate, then you might either lose or gain money. But otherwise, we will actually pay direct to any account that you have shared with us. So to the members, really thank you very much for being a good audience. We are just going to close off. I will give my panel, the two wonderful ladies here, a minute each to wrap up and what they think should be the take home for our listeners around dividends. And but also importantly, always feel free to reach out to us. I believe John will share our contacts. The conversation shouldn't stop, the questions shouldn't stop coming in, and we are available and ready to respond. So I'll start with Remy, your parting shots.
Thank you so much, Bob, for moderating this. And our people on the call, thank you so much for sparing your time to join in and listen in to what it means as far as company dividends are concerned. Yeah, so my parting shot would be for you to always be keen on the different company announcements, especially their financials, if you want to follow up on your returns as a shareholder. Be keen of the dates so that you don't miss out. Like I shared earlier, there are those who sell, then after the dividend is paid, they claim that I did get the thing. So just be keen of the dates. Then also have your details up to date, your payment details, your bank accounts, your mobile money numbers, always have them up to date so you don't miss out on your payment at a given time. Yes, thank you so much. God bless you. Over to you, Michelle.
Maybe for me, it will not be particularly in regard to dividends. My parting shots, I would like to encourage investors to educate themselves on many of these topics further. And it's from that you'll be able to understand better how to structure your investment. Investor education is very important on so many scales, on so many topics. Do not invest blindly. Have knowledge of what you're investing in and what it means for you to make those investments. These are also forms of investor education, and I think it's just very important. So just that. Sorry, Bob, you're on mute.
Sorry. Yeah, thank you, Michelle. Yeah, so I was saying that in addition to what Michelle is saying, the USE through the USE Academy is dedicated to ensuring that we can educate the public, we can support the public to understand how to derive value from the market. We will continue running this series. I see there are some questions we might not have answered, but the team will get back to you. I see some people are asking for presentations. Yes, we do. We will share the presentation. But importantly, we also have a YouTube channel, which will also send you a link to for some of the previous sessions we have had. and also for the upcoming ones. So please spare some time, 10, 30 minutes. You will learn something and you will make, which should enable you to grow and make your money work for you. So we look forward to seeing you in our next session. And thank you and have a wonderful day. God bless. Until next time.